Hi everyone, this is Gaurav Pansari here, GP as you know me, host of Numbers and Fact, where we talk about numbers that count and facts that matter. We have a guest here who's spent his career in the accounting world for decades now as the former chairman and CEO of Deloitte Italy, Frank. Frank, great to have you on the show. Thank you so much for taking our time. How's your weekend going?
Thanks for inviting me. Looking forward to the call. I've spent my life in this industry, and I'm absolutely passionate about it.
Awesome. So, Frank, a brief introduction about yourself and the work that you've done would really help the audience get to know you better.
Sure. I've spent over 40 years in professional services, most of which has been spent in with Deloitte. I spent the first 10 years of my career with Deloitte in New York City. I spent the second 12 years of my career with Deloitte in Los Angeles, where I was CEO of Deloitte's West Coast practice. That was all their audit, tax, and consulting business, about 6,000 folks and about $1 billion in revenue. Then in 2000, I left Deloitte, went to work for a firm called Herbalife International. I was at Herbalife for almost 4 years. Sold Herbalife to two private equity firms, and then moved on to Deloitte in Italy, where I spent the last 10 years of my career as chairman and CEO of Deloitte in Italy. I then joined a firm called Alliant Group here in Houston. Alliant Group is a very niche tax consulting business that works primarily with mid-sized CPA firms. And so we find ourselves here together.
Amazing. So 40 years is a long, long time, Frank, right? You've seen different waves in the industry. And I know you recently spoke about the shifts that have been happening in the ecosystem, right? So from the paper economy to internet and now to AI, right? How do you see those shifts in the context of CPA firms and accounting firms across the world?
Everybody has a different view on what's been happening in our industry. And I will tell you that from my perspective, I tend to tell folks I have lived through 3 generational technology changes. The first generational change really started in the mid to late 70s, and it lasted through the mid 90s. And that was really when the personal computer was coming in. No more paper spreadsheets. We were using Excel. And at the time, I can remember people being really concerned. Now, instead of doing tax returns by hand, we're going to be using some type of technology system, and people were wondering whether this was going to affect the employment of all the folks into the CPA firm profession. And quite frankly, just the opposite. From the mid-70s to the mid-90s, you saw exponential growth in our business, and technology was the leader. The second technology wave I define as being caused by the internet from the mid-90s until about 2020. And again, it was seismic change, but it lasted for about 20 years. And the internet allowed us to communicate on a much more effective basis. It allowed us to communicate over time zones, much more efficient. And again, many people were concerned as to what this was going to do to employment in the profession. And again, the second seismic shift, mid-90s to about 2020, and our industry exploded. I see the third seismic shift as having begun around 2020, and I'll equate that to AI. And you're hearing the same type of talk, people being concerned. What I believe is different about this third seismic shift, as opposed to the first two, is the speed in which it's going to happen. The first two seismic shifts, again, mid-70s to mid-90s, mid-90s to about 2020, took decades to become effective. I truly believe AI is going to significantly increase that change, probably to 3 years. So we have to be ready as an industry, especially if you're a a young associate in our industry.
Very interesting that you say that, Frank, right? So the fact that the speed of change is so rapid, it leaves little time for people to be able to adapt to that change, right? And probably a lot of the hysteria that surrounds AI in general might just be related to that speed of change and people's ability to adapt to that, right? So in the context of accounting firms, what does that adaptation become at this point of time? What are the top couple of things that accounting firms should look at so that they can adapt to the pace of the change in this ecosystem?
Great question. Let's focus on the speed of change. And I would recommend, especially to the younger professionals out there, not only to be hesitant about that change, embrace it. This is going to give you an opportunity to even the playing field with the most experienced folks in our profession. This is a once in a lifetime opportunity for you to get ahead of the curve on AI, learn how to use it. And I'm going to explain to you how I believe you're going to have to use it. But this is an opportunity. Grab this opportunity because a lot of the folks who've been in this business for a long period of time are going to be hesitant to embrace this change. They're going to hope that this change is not going to affect their careers until they retire. Grab it. This is a once in a lifetime opportunity. Here's how I see AI changing our profession. You hear many folks who are focused on AI's benefit with regards to cost reduction and efficiency. And there's no question. AI is going to have a role in cost reductions and efficiency. That's not where I see the real benefit. The real benefit is going to come in the data that every CPA firm has and in the intellectual capital that every CPA firm has. And when I talk about intellectual capital, what I mean is every single professional services firm has value-added services, value-added solutions, and value-added income outcomes. And all of this is going to have to be organized on some type of AI repository. For those folks who are focusing on compliance, and quite frankly, that's almost 90% of our industry. Many folks like to believe that if they do reactive consulting, that is consulting. When your client has a transaction and you work on that transaction and you do some really high-level planning, some real high-level research, that's not consulting. Okay, that's being reactive. The professional in the future is going to have to become a consultant. And just because you are really good at doing compliance, that skill set does not necessarily transition to being a good consultant. Now, let me take a break there. All that you have learned by doing compliance is going to help you be a really effective consultant. So don't misunderstand me. That compliance background is going to be very critical to you being successful. But because you can do compliance doesn't mean you can consult. And so what we are going to have to do as an industry, just because we're going to be freeing up people's time, that doesn't mean they can now transition to be a consultant. We're going to have to put a structured process in place to make sure that we're training those folks to be excellent compliance professionals, which they are, to becoming excellent consultants. And that is a process, and it's a structured process, and it's change. And most professional services firms, especially those that are rooted and historical in the CPA world, have trouble with change.
So I'm going to ask you to hold that thought for a moment, Frank, right? You mentioned two things. One, you mentioned the importance of compliance and how that feeds the narrative into consulting and how it makes you a great consulting. But I want to go back in a bit into compliance itself, right? When I started my career about 20 years back, 18 years back in accounting, uh, firms used to be defined by the quality of the compliance, the trust that they bring, the processes that they have in place, right? And that used to be a differentiator for firms, that firm A versus B would vary based on the quality of the compliance work that they do, right? But as the industry is moving forward, what I see is compliance is starting to become a lot more commoditized, and firms are often starting to get trapped in the compliance trap, as we call it, right? Where because of the amount of time that they spend doing compliance, they're not able to focus on the consulting work that's out there on the table for them, right? So, how do you think that shift happened, where compliance moved from a competitive mode to starting to become a trap for these firms?
That question is the crux of the issue. And let me start out by saying never believe that compliance is not valuable. Compliance is very valuable. I would proffer that nothing in our industry takes more intellectual capital, more domain experience than doing a complex 1065 properly. The folks who know how to do that bring a significant amount of value to the marketplace. But the issue is just what you described, and that is the marketplace will not pay for that value. Okay. The service is still valuable. The marketplace is just not going to pay for it. And the service is going to become more commoditized. And the client is going to expect to reap those benefits. Meaning, as that 1065 becomes more efficient to prepare, still need the value-added experience of the preparer, but many more steps are going to be done by AI. The client's going to want to see that reflected in their invoice. There's no way around it. I've seen it in the last two shifts. Clients expect to benefit from technology savings. Now, in order to replace that revenue, we as an industry are going to have to become much more consultative, not reactive. And by consultative, meaning there has to be in your firm a specific process on how you get your intellectual capital into the marketplace. Now, remember how I defined intellectual capital: value-added services, which includes compliance, value-added solutions, and value-added outcomes. So envision an AI repository that holds all your intellectual capital, all of it, everything your firm has that brings value to the marketplace: value-added services, value-added solutions, value-added outcomes. And now you have to put in place in your firm a structured process to get that intellectual capital into the marketplace. And there's only two aspects to the marketplace. It's existing clients, those folks that you're serving, and what I define as future clients, those folks that you want to be your clients. So let's define your existing clients as distribution system one. Distribution system one has to have a certain process where you're getting your intellectual capital into your existing client base. And what I have done in the past, I have a 7-step process on how that gets done. It gets done by the client service team. They go through 7 steps to get to match all the value-added services to the clients they're responsible for. Okay, distribution system one. By the way, in distribution system one, almost all your people can do that. They're dealing with clients. They don't have to deal with rejection. They're used to serving the clients. They have a relationship with the client, and the client trusts them. Okay. Distribution one, everybody in your firm should be able to play in that sandbox. Distribution system two is a little different. Remember, distribution system two is the methodology by which we're going to get our intellectual capital into the marketplace of companies, entities, individuals that can benefit from our services, but are not existing clients. In effect, distribution system two is the methodology by which we bring in new clients to the firm. And again, the way I have done it is I also have a 7-step process in distribution system two to match our value-added services, solutions, and outcomes to the marketplace of companies that can benefit from them, but are not existing clients. Now, I'll be honest with you. I doubt more than 10 or 15% of your people can do distribution system two. So where I would start for almost every firm that I've spoken with is distribution system one, because it's the lowest hanging fruit. It's probably where 80% of your opportunity is. And it will result in very quick wins. Wins being bringing value to your clients. This has nothing to do with selling. This is how you bring value to clients. And you should be doing this or you're not serving your client properly. With respect to distribution system two, where I said 10 to 15% of your folks can probably do this, what I would do with those 10, 15% of my people, I take all their clients away. I strip their clients out. I'd reassign them to people who are working in distribution channel one, because they know how to do that. And I'd have the 10 to 15% of my partners, my managers, my seniors, or my associates, those who have the skill sets to go out to the marketplace and bring in new clients. And I wouldn't have them with the burden of existing clients. So distribution system one, how we bring value-added services, solutions, and outcomes to existing clients. Distribution system two, how we bring value-added services, solutions, and outcomes to the marketplace of companies that we want to be our clients.
That's an amazing framework, Frank. Now, let me do something. Let me focus to begin with on distribution system one. Right. When I speak to firms who've been doing compliance and focusing on compliance, most firms are not able to move out of compliance into advisory and planning and consulting services to their clients because of multiple reasons that I see. And on the ground, the biggest reasons end up being, hey, I need XYZ license to be able to do that. B, I do not know where to start. C, hey, I do not have the team to be able to get into execution of that, right? So a lot of reasons that often end up coming like excuses. But then bottom line is people do not know where to start, even with distribution system one. In fact, a lot of small firms, they keep doing consulting, right? So they keep doing that as an action because their clients call them up, they send them an email, hey, Frank, I need help with something, and they'll just pick up the phone, help them out because they are a customer, right? Without putting the value on the table for both the client and themselves. And this consulting keeps on going there, right? So there's no formal system that firms are used to be able to enable this distribution system one, right? So if I have to then ask you here, Frank, what would be the exact process of a firm which has been doing compliance for a decade, couple of decades, right? And now wants to explore the consulting angle and wants to get started? What's the first step that person should take?
Distribution system one. Let's review. That's the methodology by which we get our intellectual capital, value-added services, value-added solutions, value-added outcomes to our existing client base. Remember, I told you there was a 7-step process. I'm going to give you the 7 steps, or a few. I'm not going to go in detail to all 7 steps, but I'm going to give you a little context. I'm very big on context because I believe context is important. The best human resource strategy is a revenue enhancement strategy. And the best revenue enhancement strategy is a human resource strategy. Now, if you're listening to this, you say, Frank, what does that mean?
Yeah, I'm there.
I'm going to explain it. Distribution system 1, intellectual capital to existing clients. Every single client you have needs a client service team assigned to it, which I'm quite sure it does. So that's step 1, and I'm sure that's been done. Step 2 is that every single client service team meets monthly. And when I say every single client service team, that includes the most senior person on the team, partner, manager, senior and associates. Everybody on the team meets as a team. And at that meeting, what they do is they discuss the value-added services, solutions, and outcomes that apply to all their clients. Now, remember, I told you, you have to have all your intellectual capital in some type of AI repository. The way I organize my intellectual capital in the AI repository is by industry, because that's how the marketplace sees itself. In my repository, I have my value-added solutions, services, and outcomes by the industries in which I work: construction, real estate, retail, manufacturing, technology. And during those meetings, we go through one client's a real estate company. We go to our AI enclosed repository. Here are all the areas that our firm can bring value to a real estate company. Now that client service team is going to pick the 3 or 4 value-added services, solutions, or outcomes that apply to that client. The next step, a strategy is developed on how those value-added services, solutions, or outcomes will be brought to the client. The next step is the partner and hopefully a few other folks will set up a meeting to go to the client and just discuss with them, this is what we see in your industry. These value-added services apply to you. We want to make you aware of them. This is not selling. This is educating your clients on the areas that can bring value to them. We never bring anything in front of a client unless it brings value to them. That's going to lead. There's no client that doesn't want to hear they can have a value-added solution that's going to save them $1 million. They're going to ask, how much is it? What's the risk involved? Do I have to file an amended return? Are my competitors doing the same thing so they know it's safe? But go through a host of questions. Then the next step, and the most important step, by the way, is what I call accountability. Meaning that client service team is going to meet monthly. Again, all of this is done monthly. It becomes part of your culture. This is how we as a firm serve our clients. If you become one of our clients, this is how we're going to serve you. You're going to know about every single value-added service, solution, and outcome that my firm has that can bring you value. You're going to know about it. Whether you want it or not is your choice, but it's our responsibility. That's how we serve clients here. And by the way, if you don't serve your clients that way, you may be subject to malpractice. Because if another firm goes in there and shows it to your client, they're going to ask you what you've been doing for the last few years. Let's get to the accountability feature. Every single person on that client service team is held accountable, but first and foremost, the partner, because she is the one responsible for making sure all this happens. And if you have an accountability meeting, and that accountability meeting, by the way, has to be done with someone that has significant influence and authority over 3 areas. And the 3 areas are compensation, promotion, and future employment. You cannot delegate accountability. If you believe one of your marketing, business development, growth professionals are the ones who are going to be responsible for accountability, it is not going to work. Okay. And at those meetings, and I've sat down, I've done these meetings. At these meetings, you talk about, here's my client list. Here are the value-added services that apply. I've got a matrix. We put all this on a matrix. We can organize it by client, by industry, by function being tax, audit, and consulting. And we review that list. And where do we stand bringing this out to the clients? The next step is what I call celebration. And what celebration is we would take 10% of the fees. Now, this is optional for firms, but this is what we did. We took 10% of the fees and we split it evenly to the client service team below partner. So if we had a $100,000 fee, we took 10%, $10,000, and we split it 4 ways: manager, senior, and 2 associates, equally. Okay. Team approach. But accountability is the most important step. If you don't have accountability, and people use different words for accountability, and I should have prefaced this in the beginning. To me, words make a difference. I've heard people use different words, and the fact that they use different words doesn't mean that they're wrong and I'm right, or vice versa. I've heard people call this enforcement. Okay. From my perspective, it's not enforcement. Okay. We, as partners, have an accountability to each other. And that accountability is that we are going to serve our clients to the highest level. We have another aspect of accountability, and we have accountability to the next generation. And I call that stewardship. And that accountability is when it's time for me to retire and it's time for you to take over that client, you're taking over a client that has been serviced to the highest degree, not just in the value-added compliance services that we have, but also in the value-added consulting services, value-added consulting solutions, and value-added consulting outcomes. Those are the accountability features. And we don't enforce that. We're partners. That's accountable. You're accountable to me and I'm accountable to you. That's where most firms fall short, because the leaders want to delegate accountability, because accountability is difficult.
Yeah, that's very true. So I usually end up having a much more simpler approach, a 3-pronged approach of what I call discovery, engagement, and execution when it comes to moving from compliance into advisory or consulting of any sorts. What I typically see firms do well is execution, right? That is something that most firms are great at, right? But then where I see firms falling short a lot is the entire discovery and engagement journeys with their customers when it comes to consulting. So just double clicking on the same thought, Frank, right? So how does the transition actually look, right? And I'll merge 2 questions into one. One is, you mentioned some things where firms fall short and underestimate the impact of is accountability, right? And second, I want to go deeper into that a little bit. And second, I want to also understand is, how drastic is the shift, right? Is the shift similar to someone changing a weight class in boxing, or is it someone moving from boxing to MMA?
These processes that I am talking about are a cultural shift in the firm. And, culture is something very difficult to speak about because every firm believes their culture is different. Every firm believes their culture is better. And I'm not here to argue whether culture is different or better. I will tell you that from my perspective, culture is something that's ever changing. It changes with diversity of your people, diversity of your clients. If you merge in with a new firm, people say, well, I want to keep my culture intact. And I may question, well, maybe we should see what the culture is in that other firm, and maybe they're doing some things better than we're doing. And maybe we can combine both cultures and get an even better culture. But for me, there's always an umbrella over culture, or a roof, however you want to define it. And for me, it's always been two tenets. Tenet number one is, what am I doing today to help make every single person I work for more successful? And tenet number two is, what am I doing today to bring more value to my clients than anybody else in the marketplace? And those are the two tenets for me by which I build a culture. And my culture is not static. Okay. It changes. And change is difficult in any industry. Humans by nature don't like change. And it takes someone very special. And culture is top driven, and change is top driven. And unless you have leaders that are 100% passionate about that change, it's not going to happen. Because if you give it lip service, your people are smart. They're going to know you're just saying what I define as politically correct pablum. They can see through it. This is not the new thought for the month. This is not the new initiative for the month. This is a change in how we are going to do business. And we're going to be implementing this distribution channel 1, distribution channel 2 into our entire organization. It's the way we're going to help our people become more successful because they're going to learn to be consultants. And it's how we're going to bring more value to our clients because we are going to ensure that every single one of our clients are introduced to our value-added solutions, services, and outcomes.
That's amazing. Now, Frank, you mentioned the cultural change that comes with this, right? Now, in terms of this changes, especially with people, how does that pan out? So I'll give you an example. So I saw a hiring post about 6 months back where a firm was trying to hire a tax associate, and the terms of the employment were such that through January to April, you work 70-hour weeks, right? And the rest of the year, except the tax seasons, you work for 4 days a week, right? Now, there's a huge shift where people are built in a way that I work for 6 months, 70-hour weeks, and the rest of the 6 months is just day to day, right? Any thing comes up, a reactive approach to dealing with clients, right? How does that people approach need to change here in terms of the talent that you have? Culture is something that you've already mentioned, but how do you shift an existing team which is used to a certain way of working where 6 months go with 70-hour weeks and the other 6 are just reactive outcomes that you deliver to your clients? So how does that shift happen in terms of the people, the team? Could you throw some light on that?
I'm going to define the paradigm you just gave me. Okay. You're going to work 70 hours a week during the busy season, and you're going to work 3 to 4 days a week off busy season. Okay. That is a reactive firm. And 3 years from now, reactive firms are going to be out of business. You heard my two tenets. What are we going to do today to help make our people more successful? And what are we going to do today to bring more value to our clients than anyone else? In order to make your people successful, it's not only the firm's definition of success, it's the person's definition of success. If that person's definition of success does not include 70-hour weeks, they're not going to be there long. If they need a job, they'll take the job. And when they find something else, they're going to leave. What you have to do with your people is say, look, we want you to be successful here, but it's a two-way street. I know that you've got a personal life. So we have to determine what you're defining as success in your personal life, not the nitty-gritty, but big picture. And then we're going to explain to you what you have to do here to be successful. And let's see if we can get both of them to work. So you may tell me, Frank, my daughter's a great soccer player. I'd love to spend 4 hours a week helping coach that soccer team. Going to be a few hours on the weekend, a few hours during the week. And my son is an incredible debater. I'd like to spend some time mentoring his debate team. So I understand your definition of personal success. That's great. We can work with that. Can you give me 36 hours, 42 hours a week? And during those 36 to 42 hours, can you adhere to those two tenets? Can you help make the people you work for more successful? And are you going to bring value to your clients? If that answer is yes, we can work. Because it has to work both personal and professional. If you come back to me and say you want to spend 40 hours a week coaching your daughter's soccer team, it's not going to work. And that's okay. It's just not going to work. And if I want you to work 70 hours a week at the firm, it's not going to work. It'll work for a short period of time, but that's not your definition of success. It's not the firm's definition of success. And it's not solely your personal definition of success. It's combined. And I can find a way to make you be successful under those former terms. Now, all things being equal, I got to be really crystal clear on the statement. All things being equal. If you tell me your goal is to be a partner, you can do it working 36 hours a week. You may get there faster if you're willing to work 46 or 50 hours a week, but you don't want to, and that's okay. Again, that's all things being equal. You may be so good that you can get the partner faster in 36 hours a week than someone else working 50 hours a week. That's not the issue. The issue is comparing you to you. And we can find a place for you. But we have a responsibility. You talk about the person who's working 70 hours a week. That doesn't work today. Doesn't work. We as a firm have a responsibility to train that person to be more of a consultant. They may not be a superstar consultant, but we certainly can train them to be effective in distribution system one. There's no question. But we have to train them to do that. Same way we train them to be good in compliance, we're going to train them to bring value-added services, solutions, and outcomes to the marketplace. But you need a process in place. And that is going to take a complete restructuring of your firm. I've seen it. You have marketing functions that are critically important. You have business development functions. You have growth people. You have salespeople. They all have to be part of one cohesive team. We don't have a marketing department that does this. We don't have a sales department that does this. We don't have a growth department that does this. We don't have a business development department does this. They are all a combined team who are working on each one of those steps that I described to you in distribution system 1 and distribution system 2. Now, those who have marketing expertise, those who have business development expertise, are going to spend a little bit more of their time in distribution system 2, because that's the methodology by which we bring in new clients. And the expertise that marketing professionals have and business development professionals have, probably 80% more applicable to distribution system 2 than to distribution system 1. But they're equally important and equally applicable. We work as one cohesive team. We don't have a bunch of disparate departments. That doesn't work. At least it doesn't work for me.
No, absolutely. You're very right in saying that, Frank. I believe fundamentally it ends up becoming like pods of team where people who are looking at growth, people who are looking at marketing, people who are looking at execution work together towards a common goal, right? One last thing on the team bit that I keep saying, Frank, is the incentives and priorities for a partner versus, let's say, a manager or an associate when it comes to consulting differ a lot, right? In the sense that in most firms, a partner has a very high incentive towards growing the business and making sure that there's enough growth for the overall firm and that you are adding continuous value to your clients. But as you go down in the hierarchy towards the managers and the associates, that ownership shifts more from growth of the firm, adding more value to the clients and the firm, towards making sure that they don't screw up, right? Making sure things are right, right? So that risk-taking appetite down the team also reduces, is what I've seen, right? You briefly mentioned about that in your incentive structure, in the sense that I think the last point that you mentioned about celebration, of making sure that the celebration applies across the board to all team members. So I believe that alludes to some of my question, but I would love you to go deeper about how do you align incentives across the hierarchy of a firm to make sure that they are aligned towards the same goal.
Again, context. I would classify this as both incentive and motivation. And by motivation, I mean what we are going to do for you is build out a whole new skill set. This skill set is going to make you much more valuable to our firm, but it's going to make you even more valuable to other firms who do not build out this platform. And if we, as a firm, are not giving you what you want, you've got this whole new skill set that you can bring to another firm. And that's extremely valuable. And I've seen it happen. When we instituted this distribution channel 1 and distribution channel 2 in Los Angeles when I was with Deloitte, we had competitors hiring our people at significantly more compensation than we were paying them, because I couldn't afford to match that compensation for every single person that we had. And these people brought this intellectual capital. One, now they were more effective consultants, but they also understood the process. The process that I just described to you, or described before, distribution system 1, distribution system 2, is not rocket science. It's pretty simple. The real difficulty is getting it implemented, because it's a culture change. And most leaders don't want to deal with the hassle of a culture change. Usually the only time you can get everybody behind a culture change, because it creates so much angst amongst your people, is if you are in a financially desperate situation, or you have a leader that's a megalomaniac, egomaniac, and they really want to make a difference. And when I used egomaniac, megalomaniac, I use that in the highest complimentary terms. Someone who wants to make a difference, because most people in our industry don't want to make a difference. They just don't. And to make a difference, you have to put yourself out there. You have to take risk. When you take risk, people are going to start, they say, you can always tell the pioneers, they have the arrows and knives in their backs. Well, that's what happens when you try to change in our industry. It's a very staid industry. And I'm telling you from my perspective only, this is what I believe. It's not what I know. But the changes are going to come so quickly that if firms are not proactive enough, they will not be in business in 5 years.
So that's actually a very strong statement, right, Frank? And that brings me to the last thing that I wanted to touch upon. What does a firm look like in 5 years? Right. So what does a successful firm look like? I think you've painted a picture of what firms might not work out in another 5 years, because usually these questions are a decade out, but I think we're not down to talking about 3-4 years, right? So two questions then. One, what's a great firm looking for you in 2030? What do they do right? What can a firm do wrong in 2030, right? And second, what role does AI play in this entire journey? How do you make it a friend, not an enemy for yourself?
That's a loaded question, to which I do not know the answer. Now, having said that, I'll give you my initial thoughts. I truly believe 5 years from now, you will see firms that are spending 65% less time on where they're spending 90% of their time today. And that's
could you elaborate? Sorry.
I'm sorry?
Could you elaborate that?
Yes. Today, firms are spending 90% of their time in compliance. I think they'll be spending 65% less time on compliance 5 years from now. So that means either they're going to have fewer people and much lower revenue, or they're going to develop processes or hire different people to become much more consultative. You are not going to be able to replace your revenue with compliance type services. You're going to replace your revenue with value-added solutions and outcomes and some services. Remember, I defined value-added services as including compliance. It's still going to be a value-added service, but it's going to be priced as a commodity. Nothing you can do about that. So there's a slice of value-added services, consultative type services, value-added outcomes and value-added solutions that are going to be priced on a different model, which is also going to be very difficult for our industry, because this has always been an industry about hours and rate. We're going to have to figure out that answer real quick, and I don't have an answer for that. Outside of contingent fees, that's always been very difficult for this industry. But the firm of the future is going to be much more market-faced, spending much more time on bringing their value out to their existing client base, and much more focused on going out in the marketplace, bringing in new clients. Remember, in distribution channel 2, you're bringing in new relationships to the firm. And usually that new relationship is on one particular service. But once we have been successful with that distribution channel 2 company, it now becomes a client. And it goes into distribution channel 1. And we need a client service team assigned to them to bring them all our value-added services, solutions, and outcomes. So again, I'll summarize. I see the firm 5 years from now as being significantly more efficient in compliance, many fewer people spending time on compliance, and either spending more of their time in consulting or you're going to have to hire new folks to spend their time in consulting. If you are not going to be able to make the transition from working solely in compliance into consulting, your career is going to be much different. And if you are not working for a firm that has a plan, you got to be honest with yourself. We as CPAs, we as consultants, we as lawyers, we as architects, we as engineers, we love the technical aspect of what we do for a living. And we as humans, because we're also humans, like to believe when someone tells us, don't worry, AI is not going to be something that's going to take your job. Okay, I feel good. You told me that. If that's what your firm is telling you, that's great. As long as they have a plan, you have to be honest with yourself. You're spending most of your time today in compliance and being reactionary to a client transaction. You're going to need some training on how to become value-added consultant. And if your firm does not have a specific strategy and program on how that's going to happen, you should encourage them to do that or find a firm that does. Because if you believe the status quo is going to get you to where this industry is going to be in the next 3 to 5 years, I believe that you're mistaken. And AI can play a very important role in you being a consultant. And when I talk about AI in the consulting realm, I'm not talking about becoming more efficient. What I'm talking about is you learning tools to make you a better consultant. And I'm telling you right now, if you don't know what an LLM is, large language model, if you don't know what Claude is, ChatGPT, Gemini, and let me pick on Claude, if you don't know what a markdown file is, if you don't know what a project or clone is, you are behind. It's incumbent on you as the master of your career. And it's not the firm that's the master of your career, it's you. I would encourage you to go to some type of AI boot camp where that you can learn how to use one of these LLMs to make you a more effective consultant. And believe me, if you learn how, again, I'm picking on Claude because that's where I focus. If you don't understand what Claude can do for you as a consultant, if you don't understand what a markdown file is, if you don't understand what a project is within Claude, if you don't understand what a clone is within Claude, if you don't understand what GitHub is, if you don't understand what Lovejoy is to help you with all those tools, you have to learn them. And they're basics. It's not going to take you a ton of time to learn that. But you have to make the investment to learn that. I'm telling you right now, most of the folks, most of the leaders who are talking about AI don't even have that basic understanding of what I just described to you. And it's not going to take you that long to learn that. You can learn that in a 8-week course, devoting an hour a week. You will be light years ahead of your folks you work with. It's your career. You can differentiate yourself significantly by becoming a basic in one of these LLMs. Pick one. ChatGPT, Gemini, Claude. The LLMs are not going to make the difference. Okay? It's the data in the firms that are going to be the gold, and it's going to be the intellectual capital of the firms that's going to be the gold. Again, intellectual capital, value-added services, value-added solutions, and value-added outcomes.
Absolutely. That's amazing, Frank. I keep telling firms, if you do not understand AI today, the basics of AI today, it's like being an accountant who does not understand how to use spreadsheets, right? So it's almost gonna become as basic as that. So quick, couple of quick fire questions,
Yeah.
Frank, sending your way, right? So one, what's the best piece of advice that you've recently given to a partner at a firm, and something that they acted upon and actually helped them?
The best piece of advice I gave to a partner was to take an AI boot camp on Claude. He took the camp. It was a 12-week camp. It was pretty intensive. It was a 12-week course. He told me it changed his life. Okay. Changed his life. Okay. Not just his work life, changed his personal life. That's so profound. And those who think using AI is like using Google don't get it. Okay. It is so much different. It changed his life.
Awesome. Second question. It's the last round. You're the corner man for firm owner, right? And you lean in before the final bell. What's your final word to this person?
Final word to a firm owner.
Yeah.
The business is going to change, and it's going to change at a very rapid rate. And I tend to look at rapid change as an opportunity as opposed to a challenge, because I truly believe this statement. I think 90% of people are going to freeze. If you're one of the 10% that's ready to take action, get started. AI is going to change your business. And it's not just AI, it's consulting, it's innovation. You have an opportunity. The middle market has so much opportunity in it. When I look at the Fortune 500, the FTSE 1000, that's big four land. When I look at the middle market, that's why private equity firms are so interested in professional services firms, because they see the middle market, and there's no one dominant in the middle market. It is a number of boutique players. And most of the firms that are playing in the middle market are doing compliance. And again, that's not a negative. You got to be really smart to do compliance. You got to be really intelligent to do compliance. You have to be really technical to do compliance, whether it's in tax, whether it's in forensic accounting, whether it's in audits, whether it's internal audits. You got to be really smart to do that. But AI is going to be doing 65% of that in 3 years. You've got to branch out. You as a firm leader have to start training your people now. So when that shift does happen, you're ready to take advantage.
Awesome. That's great to know, Frank. Thank you so much for your time.
Thank
I
you.
learned a lot. Frank said the entire context of the shift in the industry and gave everyone a framework on how to actually go ahead and execute that. So anyone who's looking to figure out the question of what do I do next, where do I get started, listen in. This is Frank helping you out with your first steps towards this journey towards making yourselves a great consulting firm, not just a compliance shop. Thank you so much again, Frank. Great
Thank you.
great
Thanks for
having
having
you on
me.
the show.
And thanks all of you for listening.
Thank you.